IMF warns easing could threaten future stability. Washington money market mutual funds could face widespread investor panic if debt markets suddenly sour, the International Monetary Fund warned Thursday in a report likely to put added pressure on U.S. regulators to tighten rules for the $2.6 trillion industry. The risk of an investor stampede out of money market funds, the IMF said, is one of several threats to financial stability that long-term monetary easing may be creating. The report comes amid calls from several top regulators, including Federal Reserve Chairman Ben Bernanke, for changes to the current structure of money funds, which they believe pose a risk to the broader financial system. The fight over new money market fund rules has largely been in the hands of the Securities and Exchange Commission, which has been hampered by internal bickering and disagreements over how to approach the matter. The IMF has been a major supporter of the Federal Reserve and other central banks cutting interest rates to near zero and using unconventional monetary policy tools to repair the global economy. But the fund explored how flooding the world with cheap money could be creating new financial crises ahead. Low interest rates are encouraging firms to make risky investments as they search for higher returns. The pursuit for yield can push up the values of some assets beyond market-determined levels. It also can drive investors to overextend themselves. If the market turns against their trades, they might not have the capital to cover losses. Money market mutual funds, which are cash-like instruments that invest in short-term debt, also are facing very low returns and, in some cases, losses with interest rates in the highly rated securities they are allowed to trade remaining near zero. The problem, the IMF said, is that the industry needs to shrink in order to become profitable, and the risk is that it may do so in a disorderly fashion. For example, another run in money market mutual funds may occur if downside credit risks materialize or securities lending suddenly halts, fueling investors' fear the funds can't maintain their value, the IMF said. That run then could spill over into the rest of the financial market as the funding money market funds provide to banks dries up. The Financial Stability Oversight Council last year jumped into the fray after former SEC Chairman Mary Schapiro determined in August that she didn't have the votes for her commission to propose new money fund rules. Prodded by the FSOC, and with more support for an overhaul of the industry in the commission, the SEC is drafting a proposal to tighten rules for money funds. Progress has slowed, as the agency awaited the arrival of its new chairman, Mary Jo White, who began her tenure this week. In its report, the IMF warned the longer that extraordinary monetary policies remain in place, the higher the potential for future risks to the banking sector. Those dangers include higher bank credit risk and delayed bank balance sheet repair, as well as difficulties in restarting lending between private banks. IMF Managing Director Christine Lagarde said Wednesday that more intensive and intrusive supervision of the financial system was critical to fixing the global economy, warning that too big to fail banks are more dangerous than ever. Authorities also need to be aware that financial stability risks may be shifting to other parts of the financial system, such as to hedge funds, pension funds and insurance companies, the IMF cautioned. Another threat to the financial system, the IMF said, would be a surprise Exim Bank of England easing that could cause Eurobank stocks to take a hit and push up the risk of a bank defaults. That is the opposite of what central bankers want. Even though central bank policies are designed to create stability in the near term, the IMF said low interest rates still may carry risks for banks' health over the longer term. Write to Ian Talley at ian.talley@dowjones.com and Andrew Ackerman at andrew.ackerman@dowjones.com. WSJ Facebook Twitter. Market Watch Barron's Smart Money All Things Digital Fins More WSJX Invitation Only Big Charts Virtual Stock Exchange Financial News WSJ Asia WSJ India WSJ China Chinese Edition WSJ Japan Japanese Edition WSJ Europe WSJ